Hey Dividend Dojo fam, Ava here, and today, I'm going to share something very personal and frankly, a bit painful. I'm talking about my biggest investing mistake, a decision that felt right at the time but ended up costing me a fortune, not necessarily $1 million in cold hard cash, but a fortune in lost opportunity, wasted time, and a huge setback to my financial goals. This was my toughest investing lesson, and it's one I desperately want you to avoid. So, if you're ready to learn from my blunder and protect your hard-earned, stick around. This is a crucial lesson for every investor, especially beginners. I've preached discipline, diversification, and long-term thinking here, and honestly, for a long time, I stuck to it. My portfolio was growing steadily, my dividends were coming in, and I felt confident. I was diligently researching, building my core positions in solid, dividend-paying companies. But then, something shifted. The market got exciting. Everyone seemed to be talking about that one sector, that one trending stock that was just skyrocketing. FOMO, or the fear of missing out, started to creep in. I saw friends, even some acquaintances, making what seemed like overnight fortunes, and a small part of me thought, am I being too cautious? Am I missing out on massive gains? Dividend Warriors was the beginning of my biggest mistake. I started to deviate from my own rules. I saw this particular sector, let's just call it the XYZ sector, exploding. Companies with little to no fundamental earnings were seeing their stock prices double, triple, even quadruple in weeks. I felt the pressure to jump in. Instead of sticking to my thorough research, I started relying on online forums, social media buzz, and casual conversations. I convinced myself that this time it's different, that fundamental analysis was old school in this new, fast-paced market. I poured a significant portion of my portfolio, a much larger percentage than I ever would for a high-risk play, into a handful of these rapidly rising XYZ stocks. I broke my rule of diversification, and my rule of sticking to solid fundamentals. I was chasing hype, pure and simple. The bubble burst. Just as quickly as these stocks rose, they crashed hard. I watched a significant chunk of my portfolio value vanish in a matter of weeks. We're talking about a six-figure sum, money that was earmarked for a major life goal. The direct financial loss was painful, yes, but the real cost, the fortune I talk about, was the immense opportunity cost. That money could have been in solid dividend stocks, compounding quietly, earning me passive income. It was also the emotional toll. The stress, the regret, the feeling of having betrayed my own investing principles. It took me months, honestly, to fully process it, rebuild my confidence, and get back on track. This wasn't just about losing money. It was about losing trust in my own disciplined approach. What did this incredibly painful experience teach me? And more importantly, how can you avoid making the same mistake? Here are my biggest takeaways. Stick to your principles always. Have an investing plan and stick to it, especially when the market gets exciting or scary. Discipline is paramount. Fundamentals matter always. Don't get swayed by hype. Always look at a company's earnings, balance sheet, and long-term prospects. If it doesn't make sense on paper, it likely won't make sense in your portfolio. Diversification is your shield. Never put too much money into one stock, one sector, or one type of asset, especially high-risk ones. Diversification protects you when individual investments go south. FOMO is your enemy. The fear of missing out is a powerful emotion that makes irrational decisions. Understand that you won't catch every rising wave, and that's okay. Focus on your long-term goals, not short-term trends. Learn from losses. Don't quit. Every investor makes mistakes. The key is to learn from them, adjust your strategy, and keep going. Don't let a setback derail your entire financial journey. This mistake taught me the invaluable importance of discipline and staying true to your investing philosophy. It reinforced why slow, steady, and smart investing, like building a strong dividend portfolio, often wins the marathon, not the sprint. And let me be perfectly clear. The story I shared with you today about investment mistake was a hypothetical one, created solely to illustrate the crucial lessons and potential pitfalls I want you to avoid. Its purpose was purely to educate you and highlight these critical aspects of investing. Have you ever made a big investing mistake or seen someone who has? What was your biggest lesson? Let me know in the comments below. And tell me what topic you want me to cover next. Your questions fuel this dojo. If you found this video insightful and helpful, please give it a big thumbs up, share it with anyone who needs to hear this lesson, and don't forget to subscribe to Dividend Dojo for more actionable financial insights and training. Hit the bell icon so you never miss a crucial lesson. I'll see you in the next video, ready to build more financial strength. Happy investing, Dividend Warriors!